Good morning, listeners, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities, PCG Research. US markets stabilized on Wednesday after the release of PPI numbers, which decelerated year on year and doing little change in expectations that the Fed will hike rates by 75 bips instead of 100 bips. Asian markets are marginally in green and Singapore Nifty is trading 50 points higher. On Wednesday, the benchmark indices opened down with a huge gap, but after a lower opening, we saw a smart recovery in the market, and in fact, the Nifty has managed to cross its previous high, which was around 18,100, but it stopped at 18,100. It was not at all expected that the market can recover so much from the lows. We were of the view that 18,000, 17,800, 17,900 would act as major resistance for the market based on the global cues. But in the short term also, the market managed to cross all the important levels and close almost at the 18,000 levels. The medium to long term structure of the market is bullish, and in fact that has actually helped the market to recover from the lower levels. It stopped exactly at the given support level at 17,750, and from there it recovered smartly. The rally was completely broad based. We saw activity in almost all the sectors except IT because it is more sensitive to the rate hike in the US. So that's the reason we are seeing weakness or sideways sort of activity or more liquidation in IT companies. But otherwise, we saw specific buying interest and lot of buying on dips sort of activity in financials. In fact, Bank Nifty crossed its previous high and closed at 41,400, which is very close to the all-time highest levels of 41,800. Now, if we go through with the other indices, then there also we saw recovery. Auto also recovered from the lower levels. FMCG as well as we saw activity in real estate and infra companies. But if we go through with levels of the Nifty, then 18,100 is going to act as major resistance in the short term. Above that, the Nifty would start rallying towards the levels of 18,300, 350 on which we discussed in the previous post. So there we are expecting market to reach in the near term, but for that we need market to cross the level of 18,100. On the downside, 17,900, 17,930 would act as major support for the market in the short term, and below 17,900 the market would again try to retest the levels of 17,800 or 750. For the Bank Nifty, 41,000 and 40,700 would be support areas. The strategy should be to look for buying if there is any correction during the day close to 17,950, 17,900 with a stop loss at 17,800, or we should look for adding long position if the market crosses the level of 18,100. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me and have a great day to all of you.